The stock market is off to another wild week. We're seeing headlines about the Iran peace deal, and it has the stock market rising, pushing companies like Micron, AMD, Intel, and of course, SpaceX higher and higher. SpaceX just had their IPO on Friday at $135 and it's currently $187.54. Today we're breaking down what's going on and how it affects our ETFs that most of us are holding in our portfolio. So for those of you that are new here, what is an ETF? It's a basket of stocks. And you don't need to have 50 different ETFs in your portfolio. You don't need to chase all of these individual companies. You just need a few solid ETFs that hold thousands or even hundreds of companies update for you automatically to let you build wealth without stress. That's why ETFs like VOO that gives exposure to the S&P 500 and VTI that gives exposure to the total U.S. stock market, as well as others like SPMO, the Invesco S&P 500 Momentum ETF, SMH, the VanEck Semiconductor ETF, QQQM, the NASDAQ 100 ETF, and VGT, the Vanguard Information Tech ETF, are so popular. They're diversified, low-cost ways, beginner-friendly, no matter what kind of day we're having, no matter what kind of week the stock market is going through with all of these geopolitical tensions and news, tech rallies, IPO hype. ETFs are there to make investing easy for us. Let's take a look at VTI and VOO, and these are core investments that anyone can get started with to build their portfolio. You don't need both. There is a significant overlap when it comes to these two funds of about 88%, even though VTI holds about 3,500 companies while VOO holds about 500. The top holdings are the same and the weightings are similar, with NVIDIA, Apple, Microsoft, Amazon, Google, Broadcom, Meta, Tesla, all in the top 10. And when it comes to performance, these two funds are usually very similar. Year to date, VTI is up 11.5%, while VOO is up 11.05%. VTI will allow you to own everything, large, mid, and small cap stocks. It's for someone who wants maximum simplicity. ETF, one decision, the entire U.S. market, while VOO will give you exposure to those top 500 largest companies. Here's a look at my holdings when it comes to these two funds. My VTI and my growth portfolio, I'm up about 69%, and I currently have about 23 shares. And when it comes to VOO, I have 20 shares and I'm up 59%. Built my little fractional shares, some investments as little as $5. Now let's take a look at a few tech funds. I don't hold either of these two in my portfolio currently, but they're loaded with the companies that are kicking off this week's rally. We have QQQM. It holds 100 of the largest non-financial companies listed on the NASDAQ exchange, heavily weighted into names familiar to us: NVIDIA, Apple, Micron, Microsoft, Amazon. And then we have VGT, which holds a little over 300 companies and gives us a higher weighting into companies we've seen across all of the funds that we've taken a look at so far. When it comes to VGT, we have 18.6% into NVIDIA, 14.8% into Apple, Microsoft at 10%, and Broadcom at 4.6%. So a fund like this will have you ready to capture the growth when it comes to AI, chips, data centers. When those individual companies run, your ETF will move right along with it. Year to date, VGT is up 28.16%, while QQQM is up 21.2%. These more concentrated funds have higher performance, but also a higher expense ratio. When it comes to VTI and VOO, they're both at 0.03%. QQQM is at 0.15%. And VGT is at 0.9%. Now, we'll be taking a look at two more holdings that I have in my portfolio. Goes S&P 500 Momentum ETF. And this one has an expense ratio of 0.13%. And SMH, the VanEck Semiconductor ETF, which has The highest expense ratio of the funds we're taking a look at today at 0.35%. SPMO, the Momentum ETF, has you on track to capture those true winners. It automatically rotates into the strongest stocks, which is why it thrives during tech-led rallies like we've started off this week with. It holds 100 companies, and about 53% of the weighting is in the top 10 companies, including Micron, NVIDIA, Broadcom, Google, as well as some names we haven't seen yet today, like Johnson & Johnson and ExxonMobil. When it comes to my position, I'm currently up 32.62%, working towards adding 200 shares to my portfolio. And another ETF that I've chosen for my portfolio is SMH. After building out positions into NVIDIA, Taiwan Semi, as well as AMD, I decided to incorporate an ETF to get more exposure to these semiconductor names. So in the top 10 holdings here, we're getting weighting of nearly 73% into companies like NVIDIA, Taiwan Semi, Micron, Intel, AMD, and Broadcom, companies that are powering AI, data centers, and pretty much everything related to technology that we currently use. So when you see headlines about these chip companies moving up, strong demand for AI chips, SMH will be an ETF right there benefiting from it. It's more focused than the VOO or VTI that we took a look at earlier. A way to get exposure to the entire semiconductor space without having to pick those individual winners. And those ETFs are always going to rebalance for you over time. So whichever sector you want to have exposure to when it comes to your portfolio, there's an ETF for that. So we looked at today, VTI and VOO, broad, stable, low-cost ETF. VTI broader by giving you that extra exposure to those mid and small cap stocks. QQQM and VGT for that higher growth potential concentrated into technology. And then a couple with a an edge, SMH, that momentum ETF, rebalancing twice a year to keep us on track to have exposure to those companies moving the fastest, and SMH giving exposure to that semiconductor space. A newer position to my portfolio, I currently have a little over 6 shares, and I'm up 24.94%. And I just got started building that position at the end of January 2026. So you can incorporate just a few ETFs to play the role that's needed when it comes to your portfolio. They're all going to benefit a strong market rally like we're having right now. Making good choices will also have you in a fund that will recover after the rough times. While all the time you're holding it, your returns are not going to be eaten away by any high expense ratios. Do your research. Find funds that fit what you're looking for in order to be on track for strong growth when it comes to building your portfolio. I do hold individual stocks when it comes to my portfolio, but I'm selective and do heavily rely on my ETFs for the simplicity as well as stability. So let's continue to stay informed and see how the market moves now that the Iran peace agreement seems to be complete. The Straits of Hormuz will be reopening. So all three of the indices up significantly, and my portfolio is on track capturing the gains when we see headlines like this. AMD hitting a 900 billion market cap for the first time. AMD is up 333% just in the last year due to AI demand, data center revenue, and deals with big companies like Meta, SpaceX, which just hit the market on Friday, is up 16.7%. One of the most notable IPOs of all time. But I don't jump into IPOs on day one. I don't feel like I'm missing out. Many people with large orders only got filled for one share. So whatever is currently moving the market, you can have exposure through your ETFs. Whether you want low cost, low maintenance, like a VTI or VOO, tech and AI exposure, like VGT or QQQM, or high performance, very sector specific choices, like SPMO and SMH. There's no one perfect ETF for everyone. Find the one that fits your goals. I've shared a few with you throughout this video that were the right fit for my portfolio. You don't need to own them all. Remember, many of the same mega cap companies are leading these top ETFs. So more does not automatically equal diversification if there's a lot of overlap. This peace deal, the SpaceX IPO, tech being on fire today, we never know what's going to happen when it comes to the stock market. So that's why I stick to my plan, always staying consistent, slowly building towards my goals one step at a time. You're doing better than you think. Most people are still learning. Most people are still trying. Most people are still building. Keep going. The journey continues. What positions you're working on building up when it comes to your portfolio. Thanks for watching. Okay, bye.